Hello, 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 everyone. How is everyone doing? What did George say in here? What kind of day was it? It was Wacky Wednesday, George. Hello. Hello, Jacob. Good afternoon, Patrick. Patrick, third? What happened to, third, Patrick? That's the bronze. You only got the bronze today. Coco putting in the Tesla results. The Tesla beat on right before, well, these EPSs and everything were slashed before, and then they eked out a slight beat, but the numbers aren't that good. Hey, Vertical Dimension slash Amit. So, hey ho, Waka Waka, welcome back. Margin and free cash flow. I assume you were talking about Tesla getting wrecked. Yeah, Q1 going to be worse. That's why you didn't see much of a pop after this is released. Mike, is there a good site that shows SPX real-time EPS? Yeah. And I have to remember it off the top. I have it bookmarked. Evening AP's World. Hey, Nas Industry. Long wait to see if you really beat Patrick. It's a long wait. Hey, curious to what you make of the crude price action. There's a sloppy, valid 4-hour double bottom, first and second targets. We'll go through that, MJ, in 1 second. Let me just see if I can find that site that was asked for. Hold on. I got it marked here somewhere. Where is it? Yeah, you can go. This is a good one. Let's see. Let me put it up for everybody. I'm not trying to, again, if I can make everybody as self-sufficient as possible, then you don't need me. And I can take the rest of my time off. I can disappear. You want a good site for, I'm surprised I didn't remember the name, but that's why I bookmarked stuff in my old age. Hey, Christo. So here's a great site to use. It's MULTPL, multiple. Somebody could type that in the chat. MULTPL.com. Just put it in the chat for everybody. And you can look up things like the S&P price to earnings ratio. You can look up stuff like that. You can look up a lot of stuff on here. So, you can look up if you wanted the dividend yield. This is a net dividend yield for all the S&P 500, S&P 500 earnings. There's your current EPS. You can look at it in table form. So you can look up everything there. Does that help? So everybody, this is a site you definitely want. I wish I could type in here. I don't have YouTube up to type it in the chat right now. But this is a site you definitely want to bookmark. Okay? So you see where the S&P 500 earnings stand currently. And that's not projected earnings. That's where it stands currently. And I think this is old, though, reported from 22. But you can see it. I have to see why that's not updated. But you can look at some of this stuff, all this information under here. Earnings growth rate. You can see how the earnings growth rate has dropped back down. So it'll get updated again. That's one of the better sites I found. It's multiple. MULTIPL. There it is. MULTPL. MULTPL. There we go. MULTPL. Okay. All right. So, where do we sit on buy the dip? All right, so we had nothing with the crude numbers come out and a little bounce and sell off again, and that was it. Tomorrow, Then we'll get to everything. We got durable goods. So data picking up tomorrow. We have durable goods, pretty moderate importance. GDP growth rate. So this is the quarter over quarter for advanced. This is Q4s, remember. And then you got some PCE prices advanced from Q4's GDP sales. These aren't the major PCE numbers. Those come out on Friday. Initial jobless claims, continuing jobless claims. So we got a lot coming out at 7:30. 7:30 is big. New home sales, Then minor will be the Kansas City Fed Manufacturing and Composite Index, but that's see if it's still in contraction. And that's really about it. The Chicago National Fed Activity Index is very minor. And remember, PCE Friday is huge. So we have that. What else do we have? Stock market map. Little bounce back. Google still rolling over. Still rolling over. Amazon bounced back. Healthcare sort of firmed up today. Little profit taking in energy. Railroads getting beat up today. That's really it. Quiet on Microsoft after yesterday's thing. Basic materials leading it today. Consumer cyclical, then financial, then consumer defensive. So sort of a little more positioning in defensive mode today. Communication services taking one of the big hits next to utilities. Fed watch still at 25 basis points for 1 week to go till the Fed rate announcement. You had Canada, Bank of Canada. That's why we got the snapback, and we're still in greed mode. Snapback. I just want to beat my head against the wall sometimes. Beat my head against the wall. Why? Because, again, I'm talking to people today. Come on. I'm talking to people again today, and it's like, hey, Bank of Canada did their hike, and then they said they're going into pause mode. So immediately it was our Fed. There's going to go to pause mode after this hike. I said, that's not what the Fed said. The Fed has their targeted rates, okay, and they said they'll go into pause mode. They're targeting still around 5%, which puts them 2 to 3 rate hikes out at a quarter rate hike, and then they're looking to pause. Well, the Bank of Canada went paused, so the Fed's going to pause. No. Not unless something materially changes with the roadmap they've laid out. Just because the Bank of Canada does something, the Bank of Canada also have major carnage starting to happen in Canadian real estate. So, but we essentially wiped out. We came down today. It's still buy the dip mentality. Whatever triggers the buy the dip. Here was the Bank of Canada announcement, and then it was off to the races, which is fine. It hit the first and second target on those doubles. That's why we have the multiple targets coming down here, making a little reversal pattern, and then off to the races. So that is all done. Yay. Yay for buy the dip off. Our Fed's not going to pause after this meeting. They'll still outline a 25 basis point for the next meeting. Other than that, very clear line in the sand now. So do we have, again, this is not technically a double top because it's not reversing much of a move, but we'll still be watching this key area. I'm still keying off of 39.70 at this point. To the upside, not even move. I guess I can move these short-term harmonics from reverse. Remember, we hit this, stalled out at that first harmonic level and that key area. Little 2-day pullback. This is all the reason why you watch the rotation zone concept. Remember, trading in the rotation zone when you have a double, make sure you don't ignore the rotation zone because it only came down to that second target within the rotation zone and then bounced up. So, boom, boom. Just giving me another little area to what. Now look at this. We have a triple cluster up here. So if we manage to take out this 40.56 level, which we're still, On a closing basis, still in trailing mode. Still in trailing mode. Minor 40.66, more significant 40.76, and then major 40.95. 40.95, triple cluster there. So, sorry. Oh, itchy nose. So that's where we sit. That's where we sit. Good evening, Charles. Good evening, Anissa. Hey, Nas Industry. What is a fair PE? Well, that's a hard question because that's going to matter. I was looking for roughly 192 per share, and then you're looking at the multiple. 192 right now is pretty fair for the S&P. But then it's the multiple assigned to it. That's one of the reasons I again, fundamental analysis is secondary to technical analysis. All right. Fundamental analysis is secondary to technical analysis. So, because then what am I assigning the multiple to it? I mean, I think the multiples are still way too high right now. As I said, everything's priced to perfection. But this is one of the things, like where people do their analysis, and say, all right, I think the EPS for Tesla should be blah. For next year, it should be $5 per share. But then I'm assigning a multiple of 40 to 1, and somebody might say, I agree with you with that EPS estimate, but I'm assigning a multiple I don't think, because I think Tesla's out of growth mode, I'm assigning a multiple of 20 to 1. Well, your price targets are insanely different because you have two key variables now earnings per share, looking at it historically, is one thing. And then you really just have the multiple it was trading at. But with the stock trading all the time, people just say, well, I'm looking for multiple expansion, or I'm looking for multiple contraction. I'm looking for EPS expansion or contraction. You have multiple things, and depending on what analyst assigns numbers to it, somebody could have a higher EPS projection for a company, but a lower multiple. That's why, you know what, I'll look at fundamentals. Okay, I will do back of the envelope calculations overall, because I think before this is all said and done, the multiple on the S&P, especially if we have a minor to moderate recession, is going to dip below 15, and EPS will be below 192 per share. Especially with the moderate recession. So I could do a back of an envelope calculation for where I expect the S&P to go. But how am I going to trade that at the end of the day? How? Well, let's just say my back envelope calculation should say 3,000 for the S&P. How am I going to trade that? Does that mean I just short the S&P here? Say it's 3,000. When we get to 3,000, I'm going to cover. No, I mean, that's not a trading strategy. I'm going to have to wait for something else to trigger it. And let's say we see EPSs come down steadily over the next quarters, but people are willing to pay 25 P to E. Let's just say historically, let's say EPSs keep just coming down, even looking in the rearview mirror, but then people are willing to pay higher multiples. Do I trade what? How do I trade it? So that's why it's handy to look at. It's handy to do if you're really interested in a company. You can try to figure out, the EPS and stuff in line, what multiple should be paying. But just use Tesla again. I see people who say, you know what, we should still value it at 40 times PE. And here's my multiples. Another person should say, I'm with you with that earnings per share for next year's projections, but I think it should only be 20 or 25 times. There's a very different price targets with that. The only way I can trade it is to know my technical levels. If we break down or have a pattern, it's a short. If we come back down and we set up a buy pattern, it's a long. You can do whatever you want, Pep G. Thanks for being here. You can short the market. You can go long the market. Again, I can only trade the signals. What do we have? What did we have? Again, S&P, short, hit the first and second, caught on the rotation zone. We got a short-term bottoming pattern and then some momentum to the upside. The NASDAQ came down. What did it do? Hit all three targets. Then what was my next key target area? 11,624 area. My next major one. Minor was 11,659. The 50% harmonic came down and reversed with momentum bars. Momentum bars. Pause, pullback. Look at this also. After I take off these targets, I've instructed on this. If you didn't see the momentum bars, then what do I switch to? Look at the time frame. Are we after roughly 10, 10:30? 15-minute rotation zone. Nice little pullback, 15-minute rotation zone. Resumption of trend. Let me show you something else for the people trying to really learn. You saw your morning. Blah. Blah. Look at this tick. Yeah, it's climbing up higher, but we started to get those momentum bar breakout. Look at the change in the tick. Look at this. From this, over 1,000, over 1,000, over 1,000, over 1,000, over 1,000, over 1,000, over 1,000. And even the pullbacks only got down to 600, where the pullbacks right off the bat in the morning dip below 1,000. So this was your major momentum move. So if you're saying, oh man, did something really change in terms of the overall, I'll call it the fundamental structure of the intraday market? Yes. That's why I'm pointing this stuff out. This helps you navigate the roadmap. And if you're not a short-term trader, don't worry about it. It's also why we had targets. So, what's now key? What is now key? We still have the same upside targets. Unless we get some more disastrous earnings. We had Tesla. I saw IBM scroll across. If somebody could put it in there, maybe Sterling already has. I did not look at IBM closely. Unless we get some more disastrous stuff. Again, it's sort of quiet this week now in terms of tech besides Intel. You don't have a lot of tech coming out. Tomorrow we got American Airlines, Southwest Airlines. You got MasterCard in the morning. You got a bunch of airlines and MasterCard. Nokia is really minor at this point. Intel after the close tomorrow, but then you get Visa. There's not a lot. Next week really starts to kick off some major, more tech earnings. So we could be quiet in tech. Why am I bringing that up? Because if there's no disaster, this thing I still could see the NASDAQ at least tapping the 200 to check that box. You still have divergences. We got cycles on the daily starting to get to the top and on the weekly to get to the top, but they're not rolling over just yet. So, again, this is why. Remember, technical damages, because I had a number of people, should I just short this morning? Short. I said the doubles. Besides that, they're going, is this a move to new lows? No, not. It has to do a lot. It would have to at least got through 11.3 on the NASDAQ before I was focused on potential new lows. Because it's still buy the dip mentality. The S&P has to break below this at least 3,900 area before I'm even considering a trade back to 3,800, and that's not even the new lows. All right. So your key line in the sand, this is great because now you have a key line in the sand, this 11.6 area. 11.6 is really strong, and then 11.571 on a closing basis for your NASDAQ. Other than that, off your little minor stuff, look at this, in 6 minutes, are we going to close above 11.858? Well, That gives me my roadmap again. The shorter harmonics aren't as powerful as the longer harmonics, but this is at least a decent enough length that, hey, we get, I know it all. I'll focus, even on pullback moves, I'll still focus for a retest this high area. We get the retest of the high area. Then I'm focusing, if we get momentum through there, especially with tech, not major tech coming back into play till next week, we could easily return 12,000. 12,000. Look at that. Look at the 200s right there in the harmonics, 12,067. And this is return, as I talked about, into a major topping area from November, beginning of December, mid-December, and a return to the 200. This would be the first time it's tapped the 200 since last April. Which you'll hear, of course, even if this manages to close above that, we'll get the course again. The bear market's over. The NASDAQ's above its 200. Well, I remember that course right here, right in front of the double top pattern. The bear market's over. The dip is over. The dip is done. There's only one dip in this room. All right, the Dow on that 4-hour basis did not get the close, reverse there. So just holding up, again, the key level I'm still focused on for a breakout play is 33,942 on the Dow. That's all I'm really focused on in the short term. Other than that, still sitting in a huge consolidation pattern since mid-November. Russell, and this is why we use, this one was tricky because unless you traded on a 1-hour close and tried to eke something out, because the 4-hour close, boom, all targets hit and then your reversal. Again, why we use targets for double, because it gives you a target area and you got the momentum bars clearly off the Russell, and I hope you spotted these bars and the shift in the tick, Sterling, because little pullback and then the launch. But on the bigger picture, then I'll look at comments again. On the bigger picture, this does not invalidate the potential double top yet. On the bigger picture, again, still above the 62.5. We've already tapped that 87.5, but I'm watching for a retest of this 1917 area. Easily. Not guaranteed. All right. Where do we sit? What do I think will cause the markets to start rolling over and tanking to new lows? Either it's going to be something unexpected off the radar screen, or it's really going to have to be a bleed out with Q1 earnings. Because even if the Fed comes in and says, we're getting it to 5, we're not pausing yet, I don't care what other central banks have done, the market's still in full. Where's the Fed put? The Fed's going to have to pause and then start cutting early. And the Fed, see, this is what the people don't realize. If they're trying to break the Fed put mentality, then it's still there. It's still in full force. It's not just a Fed put mentality. Even people don't believe the ECBs are going to follow through with their 2 keyed in 50 basis point hikes. The central banks, due to these, again, in Europe with the negative interest rates, with the U.S. taking it and holding it at 0, and then at any sign, even when you were doing quantitative tightening back in 2018 and the market vomited, and then it's, oh crap, we got to cut again. We got to stop. It's the put that's been in place that they essentially rescued the market, even Bernanke, even before 2008, the Bernanke put. And before that, the, what was his Greenspan put. Whenever the market gets in trouble, Fed's going to come to its rescue. So it's been around for a very long time. And if they're trying to break it, it's still here. So, yeah, in some ways, it's not going to be the Fed unless the Fed gets that 5% and just says, hey, we're pausing like we said. And then the markets start deteriorating and everybody's looking to the Fed. Oh, you better start cutting. And the Fed's like, we told you we're going to pause. We're pausing. And the markets get worse. And the Fed's like, oh, we're still pausing. It's going to be interesting to see how badly especially how badly Powell wants to break the Fed put mentality. The DAX, not much new here. Still holding the rotation zone. Not much new. Notes, not much new here either. Notes, I'm keeping an eye on it. The daily's starting to get to the bottom and the weekly's still at the top. We could get one more push higher before I'll be watching for a bigger potential rollover play going into next week. Dollar index looks like it's trying to break down. Still no close above that rotation zone, and it's still at 102 area, spitting it back. We keep hitting that 102. 102. Again, boom, bleh. Selling off with the Bank of Canada announcement. So if we do break down again, quick, I think it's going to be a real quick trip to that 100 mark. VIX coming back down with the market rally. Crude, we had the EIA numbers today. I hope we talked about this potential double bottom. What did it turn into before the numbers? 1, 2, 3. This is clearly a triple bottom. And if you're trying to trade it on the higher time frame, saying, oh, wait, I was just watching on the 4 hour. Did it get a 4 hour close above there? No. And it was a triple on the 1 hour. Coming up to that first target, but it's not technically a double. So that's why people can say, well, how do I know? It's why the time frames. Yes, you can get a triple bottom on a lower time frame that still looks like a double on a higher time frame. Well, then how do I know how to trade it? That's why I have the rules that you need the close on the higher time frame. Why? Because it could be a fake out move based off the lower time frame, but you get the key close, it actually tips the probabilities in the favor of a double pattern. That's how you do it. So if you're saying, well, it's turned into a triple, means I'm not trading it on a 1 hour close above this anymore. If it's still valid on a higher time frame, I need the higher time frame close. That's why I have that structure in place for it. Natty gas, the potential double you see is still technically in place, but getting closer to getting invalidated. And the trend is still down, so it's just trailing. Hold on 1 second. All right, where else do we sit? Technically, technical analysis is first, fundamental second. Well, I agree with you. Bear better than beer. ES daily chart looks bearish. Really? I don't think it looks bearish yet. Doesn't look bearish to me yet. We start breaking below this 39, this area, it's getting more bearish. But this doesn't look bearish. It looks consolidation with a slight bullish bias. Consolidation, huge consolidation pattern with a slight bullish bias. Nothing looks incredibly bearish yet. So no short yet. I don't have a strong short pattern. You can do whatever you want. We had the little mini short patterns, and that's where I talk about it with people. Okay, those are not major topping patterns, those are minor patterns, and you saw came down to hit the first and second in the ES, the first, second, and third in the Russell, the first, second, and third in the NASDAQ. Didn't even get to the first sell-off target in the Dow, and then you got the reversal. Was that to new lows? No, that was a mini pattern, and then it finished. So no, is there another key short yet? If you're looking for a more aggressive thing, I'd watch it in front of the major breakdown level on the S&P right around this 3912, 3900 to 3912. You want more aggressive. If you now take out today's low, that could be a front run pattern once cycles roll over. Why? Because a lot of the dip buy from today, the stops in the short term are below here. Then you're back in negative gamma territory. You roll it down. It takes out the 3,900. And is that a play to new lows? No. In my book, it's a play to 3,800. There's no key target yet for new lows for a breakdown. How about if NATO assets are on the nightly news? Well, I think this whole thing with the tank stuff, it's going to get very interesting. I mean, I guess we're trying to go to World War III. Try to really piss everybody off. Yeah, I saw that he was going to introduce the Pelosi Act. I love the name of that. Here's the other thing. I'll give you a solution. Let's just make it that all trades by lawmakers have to be disclosed by the next business day, real time. All right? If you don't want to ban them, it has to be disclosed, and if they're found in violation of that, they're either prohibited from trading then, or they get major fines. If they do not abide by, I think it should be just through, they have to trade through an entity, the congressional trading entity, which automatically discloses all their trades. Wouldn't that be a fantastic idea? Think about that. Think about that. Oh, I know what bill's coming. I'm going to go buy, or we're going to announce a war with blah. Hey, I'm going to buy Raytheon and Lockheed Martin. Well, by the next day, your trades are out there. I saw you just scooped up 10,000 shares. Fine, I'm a day late, but guess what? If it's a start of a longer term trend, or you're going to kill all this regulatory of tech bills, so let me go run out and buy a bunch of tech stocks. I see whoever, and I don't care what side of the aisle you're on. I see you loading up on your Googles, your Apples, your whatevers all of a sudden. And I'm looking at this next day. You didn't just buy 100 shares. You scooped up 500,000 or $1 million worth of shares. Hey, I'll take notice of that. Wouldn't that be fantastic? Just require them. Full disclosure next day, even before trade settlement. How much do you think that would change stuff? You don't want to ban their trading? Let me ride on their coattails. Wouldn't that be fascinating? It seems those big wicks get taken out. They can, but big wicks can remain stronger. A lot of times we got a big wick down here that's not been taken out yet. You got a big wick up here that's not been taken out yet. Even this was a decent sized wick that did not get taken out yet. You can get big wicks without the takeout. Now, do I think this wick will get taken out? Yes. Do I think this one? This one could very well too. In the short term. Look, it took a long time before big wicks. Took a long time before it to take it out. So big wicks are not a trading strategy. It's an area to notice. Why? Because it's generally an area that there's a lot of stops beyond. So why? You come up here, you take out this, all the shorts whose stops are beyond this have to cover. Just like this dip, which is a decent sized wick. Everybody who bought in here, where do you think their stops are? You think if I bought on this day, you think my stops below that low or this low? It's somewhere below this low. So that's why wicks especially, because people gravitate to them. Oh, your day job got in the way, Sterling. Can't you just have your alert set up and even if you're in the middle of a deal or something, say, guys, I got to put on a Russell trade. Come on. You got to know my priorities. I'm just, gosh darn day jobs. George advises everyone here to look at charts, find top candles and bottom candles, and then watch the stream from that afternoon. It puts the present in perspective, okay? Any chance the Russell could be traded as a cup and handle on the breakout from the current level? On this? Yeah, a lot of people will be watching this now as a cup and handle. A lot of people will be watching this as a cup and handle. This being the cup, this being the handle. And now I bet you I know your next question. So I'm not going to say it. I want to know. I just answered your question, Sterling. So what's your next question? Thank you for that reminder about SAP on the DAX reports tonight at 4 a.m. Eastern. Thank you. The closes are invaluable. You could be offside real quick, and a lot of times it usually retraces to allow you good entry after you wait for the close. Yes. And what I also tell people, hey, if you want to try to trade it on a lower time frame and front run it, if it doesn't trigger the pattern based off that closing price, so you could get that breakdown that snaps back, you get out of the trade. Fine, you tried to front run it. I've even front run the trades and then being able to take off half the position because I front ran it. So I could scratch the rest of the trade at break even because it didn't close. Yes, there are ways to trade it without waiting for the close, but if you don't get the close, don't try to ride the pattern. Don't try to ride it. It didn't trigger. There's a reason. The probabilities go up drastically by waiting for the closes. If they didn't, I wouldn't teach closes. If it was close, I wouldn't teach it. It's major difference in probabilities. Since gold closed above 1940, is it headed to 1970? Well, the key gold price that I was watching for the close above was 1906. Since it closed, the next harmonic was 1948. I'm still watching for higher prices. It's in trailing mode, not chasing it here. Okay? I'm still expecting it to test this 2000 level before too long. But it's in trailing mode from earlier plays. It's not buying it, trying to eke out something here. Look, it hasn't gone that far. So I think I think there'll be a better gold pullback play. A better gold pullback play to get in on if you're not in it already. How would your thought process change if we close above the previous swing high around 410 on the spiders? How would my thought process change? Well, we're still in tactical trading mode. Does that change anything from a macro perspective yet? It just means, all right, we get above this 410 area. My next key areas, I got to revise this up a little, but it's right around, it means I'm targeting 420 to some gap fills and potentially up to 430. Does it mean that anything is going to, that I'm focusing on new highs yet? No, not at all. It's tactical trading. So from that perspective, nothing's changed. Nothing at all has changed besides it's in short-term bull mode, not long-term bull mode. You want to start to know where things start to shift based off the spiders. Remember, next target, 430. You get and I'd be waiting for a weekly close above 430. You start getting a weekly close above 430. That will tip your probabilities based off the spiders. Remember, you're better to use the probabilities in either the cash or the futures over the spiders, though. But that would be the first key tipping point. So, above 410, does that change anything? No. It means it's still in short-term bull mode. 420, does that change anything? No. We hit 430 and then close back at 425. Does that change anything? No. We close above 430 on a weekly basis. Does that change things? Yes, it tips probabilities. Does that answer your question? Pavneet. I know they don't abide by the disclosure rules they have today. I know. That's the part of the joke. But here's the thing. If they don't want to ban it, which I think they should, but if they're not going to run a ban, then disclose it. And if you don't abide by the disclosure rules, you're cut off from trading. And I actually think they should have to run all their trades through a congressional trade desk. Then there couldn't be any funny business. Congressional trade desk. You know, they probably pay no fees or anything else, and we'll get great executions off some dark pool. But fantastic. That independent organization, it's not up to them. That way, their money's parked. You're in Congress. All trades have to be executed through the congressional trade desk if you're able to trade. Think about it. So it's the congressional trade desk. Now, if the congressional trade desk isn't releasing the trades, then we might as well just ban it. Yeah, I saw that earlier. Yeah, you see, they sold. See, sometimes this is, and I mean, I'm as avid as the Pelosi with one of the greatest traders ever. Or sorry, Pelosi's husband / Pelosi, one of the greatest traders, way outperforming the market. Yeah, she's as dirty as they get when it comes to insider knowledge of trading. But sometimes they dumped a lot of tech 4 weeks ago. So sometimes it's not directly related to something. This is one of those times where it's like, well, that could have just been a coincidence because they dumped a lot of their tech. And they held a lot of Google. It could be related to DOJ, but I think they repositioned a boatload of their portfolio. Like they dumped a ton of Tesla before this last little run up too. Does that mean, maybe DOJ will drop an indictment against Tesla finally? Now, if that happened, I'd take a little more notice because then we have a couple things. But some people make it, yeah, she's just, I like the Pelosi Stop the Trading Act. Where do we sit? Back to crude real quick. Nothing's really changed. You still got the double tops not triggered, double bottoms in play. That's where we sit. Currency wise, nothing there. Let's peek in at Tesla. Did anybody see anything on the conference call? Just up slightly after hours. Nothing major. It'll be interesting to see now. Very minor bump. Even initially, there was hardly any bump from that earnings report. So I'm going to be watching for the next sell setup to come in. If it does run up, still 154 is the next key target. Why not live? I think I'm giving them. I'm trying to put something in place. You know, even live would be a little ridiculous. I mean, why not just let us see all their pending orders then? Hey, complete transparency. Let me see all your pending orders. Hey, Gary. Oh. If the market broke the downtrend line, it means the bear market's over. There's no stupid questions in here. There's some less informed questions. No. The technical end of the bear market, you want the technical end of the bear market? My personal area of where the probabilities shift? Because the technical end of a bear market, even though some people say magically that the technical start of a bear market is on a closing basis from 20% down from highs. People then mistake that if it goes up 20% from a bear market, it's magically in a bull market. No, the technical definition of the end of a bear market is when it exceeds the highs. So the technical definition is not till it exceeds the highs. My shift, besides using long-term systems, and it isn't when a trend line's broken. Because a trend line can get broken and you can sit in consolidation. My key area for the major shift in the NASDAQ is back at 14,630. Oh, that's a long way off. Yeah, and the probabilities don't shift till then. But can there be trades before then? Yes. But that doesn't shift things. Okay, class, read this chapter to yourself. The S&P is reversing, and I have to Google what's causing the move to set up harmonics. Huh? I don't understand. No, get away from my desk. I'm about to get stopped out. Let's see. I've made stuff, 2 questions. What are the probabilities? You don't want to know what the targets are? You don't know what Sterling, you don't know what the targets are? You just want the probabilities? The level that what technically invalidates it is if it breaks below the handle. So it's a tighter stop. You want a tighter stop than that? I like to use the 62.5 because if you close below that, if you need a tighter stop, and I roughly time that with things like the rotation zones, but because then you close below that, you should retest the lows. Now, you can technically close below that, retest the lows, and not invalidate the handle, but that's the technical basis. The probabilities shift drastically if you're in a bull market versus bear market, but both are above 50%. What matters, though, is your targets. That's what matters because, hey, what should I do? Is this going to 1927? Is it going to 1937? Is it going to 1948? Is it going to some level that's not on the chart? That's the question you should be asking. Because you can't have probabilities without a target. It's what I've always wondered. People put out probabilities but don't put out a target. Well, how do you come up with your probabilities if you don't put out a target and you don't put out either a stop or a level that invalidates the trade? Ask that question to people that mention probabilities on trades without targets. A lot of people don't think about that. A lot of people don't think about that. There's like, so if I were to say, there's a 67% probability of what? Of it going higher? How high? To where? What do you like on any of the companies on earnings? I really don't right now. I'll play technical patterns. I'm not playing a lot of earnings reports. Hey, by the way, hey, Michael. And it's not based off this. I mean, you know what I'm trying to target longer term. It's still dividend stocks with good technical and fundamental positions. I could care less on those about any one earnings report because why? If it drops, they're all still trading around the core position. Other than that, I don't like a lot of the earnings plays right now because a lot of they're gambling plays to me. We don't have earnings expansion. We have technically earnings contraction, but everybody's still trying to buy the dip on a friggin' earnings contraction. You have stuff like the stuff that happened yesterday with Microsoft. Everybody, their earnings report, as I said on the live stream, go back. I said I didn't think the report was that good. Everybody, then all of a sudden the next morning, this morning it's down from stuff because it wasn't that good. They just had to clarify it on their conference call that says, hey, our what we're looking at in the chain isn't that good. And people are like, oh, crap. Oh, wow, I got to sell what I just bought. Because this is what people are just looking still for a reason to buy. So I'm not going to fight that. But it doesn't mean I want to own it long term. If there's a pattern, that's different. There's nothing from a pure earnings perspective that's really interesting me right now. All right. Let's see, where do we sit? No, it's not. That's not true, Gary. Not true at all, not even considered on the street as where a bull or a bear ends. I mean, if that was the case, just look at the Russell. So it ended here, or here, or here, or here. The S&P, is it over? What was I forgot what the initial decline from the top was. Let's go down to some of, and that was 13. So if that was the case, then this would have ended the bear market, which it didn't. Again, you'll get multiple returns to these, even in a bear market. I got a fix for you. Drop the curriculum, go rogue, and start teaching technical analysis. Little insight about, hey, if people want to start their YouTube channel and teach the technical analysis, go right ahead. Let me know. I'll tune in. Little insight about price targets with probabilities, what has been coming back and supporting this channel. Thank you. Like on CSX, I did not get a chance to look at CSX this afternoon. It did release earnings. Again, oh, those are old levels. CSX beat, missed, but what? I don't personally like the plays here. There's not a solid setups. There's not a bunch of solid setups yet. So a beat and miss, still trading 31.45 in consolidation. Don't love it. P to E is okay, but it really depends on, this is where it's pretty much neutral for me. Levi Strauss looks like they must have beat. Now this one's could be a slight different story. This has a nice little potential. This, you know, this could make a little run to 1950. Getting above some key resistance here on this gap. So we're going to be watching to see how it reacts to that gap. But you start getting some closes above this 18, you can make a run to 1950. How do I come up with 1950? Don't make it tougher than it needs to be. This is a little clear path move on the weekly, and the weekly 200 right there. After a look at this, what do I talk about when things chip away at the 200? First chip, second chip, third chip. People will be like, but I didn't buy it here. It's up here now. So we get a little, any weakness. It's still got some consolidation up here. You know, I'd love to see this thing pull back to 17 something and potentially form a nice little reversal pattern or something, and then make that play potentially to 1945. But now it's proven itself. And you got earnings out of the way. Not a horrible dividend yield, by the way. P to E ratio is decent, and they beat. This thing could easily make a run higher. Don't worry about buying every bottom. Worry about the probabilities of the trade. Because you don't know it's a bottom until it's hindsight. You have potential bottoms. You have confirmed bottoms. You trade in direction. So this is forming a pretty substantial, could be longer term bottoming pattern here. So Levi's, between the two you listed, Levi, much more interesting than CSX. And don't just worry about something up on a loss. If it's up on a loss, I have to really start looking at it unless it triggers a trading pattern. Okay? That's pretty big up on a loss. I'd have to see what's going on. See, this is just people chasing it, though. I hate these kind of plays. Why? I have nothing to lean against. EPS is negative, no P to E ratio. they're missing earnings and it's getting bought up, unless it's a takeover candidate, not worth my risk. It falls into my garbage category. I want to put as many probabilities, not just from the technical perspective, but even from a fundamental perspective, in my favor. Did I teach the targets for cup and handle? What's your target, Sterling? What's your target for the cup and handle? Why would it be frightening if I was watching you live stream TA? You might do something completely different than me. I'm very nice in a live stream. Well, let us know when you're going to do a live stream, George. We can all tune in to the Geo Mission live stream. How do stocks like now remain so inflated with a P? Well, if they're in strong growth mode, it's one thing. And we also still have a lot of stupid in the market. I mean, it's absolutely absurd at that point. I mean, at least they making a profit. But service now, you think? I mean, this could be traded, can be traded technically, but your fundamentals aren't there. Yeah, they are in growth mode. Okay, but you got to be in major growth mode to have a PE. And how can companies still say that? Well, same way that people are still looking to, their trade of the year is Bed Bath & Beyond, which is going to run out of money and have to file for restructuring unless they can secure another insane loan. Their secured debt is trading for pennies on the dollar. So how come people are still trying to buy the dip in equity? You know, in restructuring, a lot of equity gets wiped out because bonds are paid first. If not all equity gets wiped out, what do you think stock is? It's equity. It's not even preferred equity. Remember, you get preferred shares, then you get common shares. Common shares are the first thing to go. So why are people still bidding up that, paying for that? Because we got stupid still in the market. We got a lot of stupid. We got a lot of people thinking that, you know, we're going back to 0% interest rates. And hey, if the Fed did, then it would change the trading drastically. Until that happens, not betting on it. There you go. So what's your target? You remembered them quite good. You taking good notes, Sterling. Very good, in case somebody wants to know what he just typed in. Sterling has it. 62.5 and 100. So what you do, not something I cover all the time. You guys don't need me anymore. Oh, well. I'm not needed. I can retire. Stop loss 1948, target 2017. Look at that target with the prior area. So, there you go. And look at that cluster right there. Look at that cluster. For you, if you can't see it, it's this blue line. See that it's a blue line that fell on top of another blue line. But now you have a harmonic cluster. You can't make this stuff up. So funny. So the next question I'd ask, I don't know if I got that to the right answer, which was lower here. It's not going to make that much of a difference. 1731.20. 1730. All right, I did have it. So people go, well, how do you use that with in terms of this with the reverse harmonics and everything else? Well, when I got another third target right here that's a cluster, I'd use stop, raise, first primary target. MGM. Yeah, MGM. That's a nice breakout pattern because you got a decent stop with it. We'll play that little song. Do you see what I see? What do I see? I've talked about the pattern before. So we have prior support becoming resistance. Boom, boom, boom. Close above it. Rising rotation zone. Pull back to that area. Close back above it. Breakout play. So you said you like the fundamentals there? Well, they're not bad. You got a nice technical pattern. Like this, a lot more, because at least they have an EPS. They got a decent PE and a really nice pattern. You're also into a clear path move with a 41.97 target for a first stop raise. So this would have had to be, I would not be chasing it necessarily right now, but this was a pullback buy. You got the confirmation again, whether you see this on a short-term chart, a daily chart, a weekly chart. I've talked about this pattern that I absolutely love. So why this is another reason why the rotation zone really helps people. Because other people say, oh, wait, it broke below this thing. But as long as it's with that rising rotation zone, lots of times you see the breakout, the return to somewhere in that rotation zone. You just wait for that close back above this resistance area. And there you go. This was also on the next bar was a percent B buy. Why? Because now there's also a fantastic stop area. Get a close below 37.50. We could easily, then it would be a false breakout. It's no double top, by the way. It'd be a false breakout, and I'd be watching for a much bigger pullback. So as long as you can identify a clear stop area, remember, every trade won't work even with the best patterns. But what I love about this is I can clearly identify a fantastic stop area. So if the pattern rolls over, let's say it's a false breakout, it breaks back down, this very key level of support does not hold. All right, trade over. Next. Maybe if it gets another good setup again. But next. NWSA. Then I'm done. Then I'm done for today. Maybe daily. What? Do I have the same stock up there? NWSA gapped up big this morning into into a weekly and maybe daily double bottom trigger. A weekly. I don't see a date. No, this invalidated it. This is a invalidation. Nope. Nope. So sorry. And remember, if you're trading, let's say this didn't happen and you were trying to trade it as a weekly, it's not triggered yet on a weekly. It'll be interesting. Remind me about this at the end of the week. I want to see where this closes. This won't be a stock that I remember to look at. I want to see where it closes on this week. All right. With that, I shall wrap it up for now. Thank you for tuning in. I shall talk to everyone later. I'll be waiting for George's live stream. And I will be back tomorrow morning. Just a reminder, we got a bunch of airlines tomorrow, MasterCard. MasterCard is going to be sort of key because of consumer spending and their transaction processing. And they're before and then Visa's after. So those two are going to be sort of key as an insight to the consumer and where we stand. Even if you're not trading those stocks, those will be very key. And one of my favorites, Intel. With that, I shall talk to everyone later. And we'll see you tomorrow. Thanks for tuning in. Bye.